The weekly Gaussian channel has officially turned green for the first time in 1,400 days. The short-term price action has rallied back upwards to 30,000. Are we going to see a strong rejection, or will this weekly strength propel Bitcoin higher? Let's go ahead and jump into the video. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. We have a lot to talk about on the short term, on the macro, from an economic perspective. It is going to be a big week. It's going to be a busy week. And by the end of today's video, you will have a comprehensive and detailed understanding of the short term and the macro charts. To give you a quick overview, we're going to be talking about the short term, exactly what has happened, exactly what is happening, the potential break upwards, and if we're going to see a strong rejection. We're also going to be going over the economic data and, of course, discussing the fact that we have seen the Gaussian channel complete a red to green flip for the first time in over 1,400 days, guys. Before we get into the video, smash the like button, hit the comment button, and subscribe to the channel. All of this goes to support the content and show me you enjoy what we do. We also do have our Telegram channel. It is the second link down below. You'll get access to updates, analysis, videos, educational posts, and news events. Everything you need to stay in the loop. If you're interested, it is the second link down below. If you're interested in joining our VIP channel, we post trading signals with exact entries, exact targets, exact stop losses. Everything you need to understand the trades and the signals are posted. You can follow it. Very simply laid out: entries, targets, stop losses. Including access to that, you'll get access to 5 group chats, our trading chart and education chat. We teach you guys how to trade. We show you trades. We develop your trading skills. Our trading setups, we show you the trades we're taking. You guys get a chance to post the trades you're taking. Our help chat, our news chat, and our general chat. So much in here for you guys to suss out. If you're interested, go ahead to a free channel, click the pinned comments, and you'll get access. So let's go ahead and jump into the video without further ado. And of course, starting as we always start, we'll start off with that market data. How are we currently looking for Bitcoin for today? So as of today, we can see August, we are 9 days into August, we are up 1.9% in the green for the month. Looking at our 24-hour volume and liquidation, volume is up 14%, sitting at 74 billion. So volume's definitely on the rise over here. And liquidations are down 6.7%, sitting at 83 million. Taking a look at the overall volatility index over here, we're going to be taking a look at the 30 and the 60-day period. We can see the 30-day period had a little bit of a hiccup, but is very much still pushing toward the downside, sitting at around 1.27. And again, I've been saying this every video, but I have to urge how crazy this is. 1.27 is the lowest we have seen the volatility index, guys, since July 2020. You know, we're talking the lowest we have seen since the COVID crash, and prior to that, the lowest we have seen since 2016, guys. It is very low right now, and with this massively low volatility, we see compression, we see consolidation, and we will see a large move. A large move is coming for Bitcoin when the volatility spikes up on the 30, and same goes to the 60. The 60-day is dropping like a rock and is pushing to record lows at 1.6. Again, the last time we saw that was 2018. Keep your eyes on the overall volatility. Looking at liquidations, 83 million liquidations, a decent chunk of liquidations from those short positions, but not as much as you would expect with such an explosive move. So overall, it does signify there wasn't really a lot of positions in the market. People were more or less sitting on the sidelines, and with this kind of move that we saw for Bitcoin, you would expect a little bit more than 83 million in liquidations. So all in all, it is something we have to be watching. Let's go ahead and jump into the DXY. The DXY has seen a strong move upwards, again, retesting for what, the 7th time, this downtrending diagonal resistance. Again, if the DXY pushes upwards, this is by no regards a bullish thing. This would be very bearish for the markets. It would obviously not be very good for cryptocurrency and obviously not be very good for the stock market. While the DXY remains underneath this downtrending resistance, we are technically in a downtrend. This trend line represents an overall downtrend. Check out the arrow at the end, you can see we are in a overall downtrend. While we remain in a downtrend, this is going to be relatively bullish for stocks and crypto, meaning we can see relief rallies, we can see continuations upwards, we can see macro continuations and new legs. If we do see a break above here, we hold above here and start pushing upwards, this will be bearish. Now, determining how the DXY will move and where the DXY will move is very reliant on the state of the economy in regards to the dollar and, most importantly, interest rates, cost of debt, etc., etc. So if we want to take a look at where the DXY is going to be moving, we have to be taking a look at inflation data, retail sales, interest rates, all that kind of stuff. And we do have our CPI data coming out very soon. We have CPI data coming out in less than 48 hours, I believe, actually. It might even be a little bit less than 36 hours. Actually, yeah, about 36 hours from now, we have CPI data coming out. Of course, as CPI data comes out bullish, if it comes out bullish, the DXY shall drop. Okay, if it comes out bearish, the DXY shall rally. And again, these are things we're watching out for. The DXY rallies and CPI data comes out bearish, the probabilities for future rate hike increases go up. Those probabilities shift upwards. The market will correct in adjustment to the increased probabilities of future rate hikes. Okay, it will front run that decision. So keep your eyes on that. Moving on. S&P 500 is still hanging quite steady at this level of support. This is a warning sign. This is one of the things I am a little bit concerned about for Bitcoin and for the entire market. If you do look at the correlation between the stock market and Bitcoin on the intraday movement and the ratio between these lows and highs, we definitely see different percentage change moves for Bitcoin. We obviously see different percentages for Bitcoin and stocks. Again, the beta of these risk assets are completely different. But if we look at the overall trajectory of price action, right? If we look at the overall trajectory on a high time frame, is Bitcoin going up? Is stock market going up? Yes, they go up and down relatively at the same time. Besides a few scenarios where we've had large regulatory news events occur within the crypto space, then we see the cryptocurrency market actually go in a negative correlation, but for the most part, they move in a positive correlation. So we do see the S&P 500 actually take a huge rejection towards this trend line. That would be relatively bearish for the entire risk asset market, because for the S&P 500 to break down, we would have to see a dramatic shift in the risk environment for risk assets in general. And cryptocurrency, while it is valued by the US dollar, it is not excluded in that pair. It is still very much valid. It is still very much a part of that market and could be dragged down with it. So definitely keep your eyes on that. We would like to see the S&P 500 push upwards. Again, the DXY, the interest rate decisions, inflation data is all going to be very telling for what is going to happen. Moving on, guys, let's get into Bitcoin. I wanted to briefly interrupt today's video to discuss my favorite exchange, BitGet. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than BitGet. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our Mega Whale promotion campaigns that we run every few months. Alongside that, guys, BitGet is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. BitGet also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, BitGet offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to BitGet. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. And we'll start on the macro chart. So as you know, Bitcoin for the first time in 1,463 days has printed that green channel on the Gaussian channel. Now, this is something you have to understand. The green channel is not a buy signal. Remember, the buy signal for the Gaussian channel is when you break into the Gaussian channel from the top side down. So this is going to be your sell signal. From your bottom side up, this is going to be your buy signal, okay? This is not a buy signal. What this represents is it represents high time frame weekly strength. It increases the likelihood of a high time frame continuation and significantly reduces the probability of Bitcoin printing a new low. That is what it suggests. It suggests right now, the 4-year cycle is going as planned. The macro reversal is developing into a macro uptrend. The weekly charts are gaining strength, and the probabilities that all of this goes down to new lows is almost diminished. Okay, that is what this is suggesting. This is not a buy signal. The buy signal was already given. We already had the buy signal. This is just a huge sign of strength on the weekly charts. But we have to break it down, guys. We have to get into the nitty and gritty and take a look at what this means in relation to the overall trajectory and expectation of the macro price action based on the 4-year cycle, because this alone is not really relevant. We have to take a look at what this Gaussian channel is saying and what it has said prior to this, and then then infer it to the 4-year cycle and see how these things are matching up. So we take a look at the 4-year cycle here. On the left, we can see we have our green phases, which is of course our bull markets. We have our reversal phases, and then we have our bear markets. Okay, our bear markets being the red. Very straightforward stuff. If we take a look at these phases, the date range trend generally matches up. We can go ahead and measure our date range trend. We see generally around 13 to 14 bars per bear run cycle. Okay, we can see it adds up. We generally see around, around 17 to 18 bars per reversal. And then if we look at the bull runs, we generally see 18 to 19 bars for bull runs. And again, you can apply that to every single prior cycle. You can see it matches up perfectly. So the date range trend, the 4-year cycle, is just a date range trend. It tells us where Bitcoin is likely to head within a specific time block based on historical macro movements. That is what the 4-year cycle is suggesting. It doesn't tell us what the price is going to be specifically. It just tells us the overall trajectory, the overall direction over a specific time frame, where it's likely to move towards. So if we take a look at prior cycles, the more important things are going to be our structural levels. These horizontal base levels, these red lines are very key. If we take a look at these red lines, when we take a look at the price action under, we have our bull run tops, okay, our bull run tops. Then we have breakdowns to retest these levels. We retest these levels for quite a fair amount of time, And when we finally break down from these levels, we see capitulation towards our bottoms. We create a new bottom. That is when the bottom of the bear run is in. After we see that, we eventually see a development of a reversal. A reversal takes us to retest this trend line. And when we break above that trend line, we actually continue towards our dotted trend line, which is going to be the first high of the official dead cat bounce after the bear run top. Okay, the dotted trend line. Now, this is when the Gaussian channel comes into effect. If we look at the specific moments on the weekly chart where the price action breaks out from the Gaussian channel on the weekly and subsequently the horizontal red line on the monthly, we see that it happens around about the same time. We see the Gaussian channel breaks out on the weekly, and at around about the same time, we have the price action breaking out on the monthly. If we go over to our 2018 scenario, we can see around about the same thing occurred. We saw that weekly breakout on the Gaussian channel, and at the same time, within that monthly candle, we saw the monthly candle break over that horizontal level. If we go ahead and take a look at the current scenario, we have seen, number one, the weekly Gaussian channel break out, and we are currently testing that horizontal base level. So what does this tell us? It tells us that as per prior cycles, we have now seen one of the first two significant points we need to see for a bullish trigger to occur for a macro continuation upwards. The second point being that level needs to be broken, held above. That level is 30,000. We have seen in prior scenarios the price flitter and flutter around that level over here. We saw candles break slightly above, break below, break slightly above, break below. That is the scenario we are seeing at the moment. We have seen the price break above that level. We have seen it push back below it. We have seen it break above. We have seen it push back below it. We are seeing that same thing. So if we take a look at that first cycle, because that is kind of what the cycle is mimicking in this instance, we can take a look at what the Gaussian channel is doing. And the Gaussian channel remained green. We flipped green. And guess what happened? The price remained above the Gaussian channel all the while we were testing and consolidating above that trend line. And therefore, for the price to continue upwards, it is absolutely paramount, according to prior data and cycles, that Bitcoin remains above the upper band of the Gaussian channel before it breaks above this horizontal level. If we fail to remain above the 28,400 level, which is the upper band of the Gaussian channel, this would signify significant weakness for Bitcoin and actually could lead to a high time frame correction. Until then, the bulls have control. The bulls have control, but they are losing strength. I want to reiterate that. The bulls have control, but we are seeing slight signs that they're losing a little bit of strength, but they're not losing enough strength for it to flip bearish. So let's go ahead and take a look, guys. If we see this trend line breakdown, that is when the bears reclaim control. And actually, I'll go back to a macro chart one more time. As per price predictions, if we see a break above that horizontal level, okay, if we get that break above 32,000, which is going to be this level of liquidity, that level that we're testing right now, the next target is going to be 38 to 40,000. This is the next bullish macro target, the next major level of liquidity for the bulls on the macro chart. Again, for that to occur, we have some indicators we are looking at, specifically a break up of the RSI. We'll come back to this in just a moment, but we do need to see that occur. So going back to this chart really quickly, we can see the dotted trend line is going to be that next macro target for Bitcoin, but we do have that $38,000 to $40,000 range, which is going to be our first target where volume and volatility will likely dry up a little bit before we continue back upwards if all this plays out perfectly. Again, this is a perfect world. If everything plays out perfectly, that is what we expect. But let's go back to reality for a second and take a look at what's actually happening on the weekly and back on the daily. So for Bitcoin to continue upwards, we need to obviously take a look at the smaller time frame, which we will do so in today's video. But if we look at the weekly chart and the daily chart, one thing we have to see is, of course, momentum flip bullish, right? As we've been seeing over this time frame, we have an overall uptrend, and we've been seeing a downtrend develop ever since we retested around 32,000. The downtrend has been developing, momentum has been falling, etc, etc. Okay, this entire structure that we are in here, this entire uptrend is represented by our momentum chart, which is our RSI. We can take these highs and low points over here on the bottom and top side, and this is kind of the range of momentum. We have overall compression within this range for the entirety of this price structure. Remember, RSI momentum is a derivative of price action. So we derive the momentum from the uptrend that we have been in. This is what we get over here. And therefore, what we can say for sure, if we want to see a continuation upwards, we need to see a positive momentum flip, a shift in momentum that is greater than what we have seen in the past. And that doesn't mean in height. That means in this diagonal level, we need to shift positive, meaning if we break above this trend line, that will shift the momentum positive and push the prices upwards. Alternatively, if we shift the momentum into the negative and break through this level, that will increase the likelihood of a breakdown from the support and a continuation downwards. Now remember, 28.4K is currently sitting above that uptrending level. 28.4K is sitting right over here, that red line. Look at how it is converging. Look how it's coming together. If we see a break of 28.4K prior to the test of this trend line, the trend line is pretty much gone. It is going to be lost. If we see a break of this trend line prior to a test of 48K, 48K can still act as support, but the probabilities we keep that as support decrease as we'll be entering that in a downtrend. So keep that in mind, guys. The most important level right now, as we push forward in time, as the 28K level moves past the visible range of this uptrend, meaning it moves into this block over here rather than this block over here, the uptrending diagonal level becomes a little bit more significant in terms of actual price trend rather than that 48K horizontal level. So we're definitely watching those 2 points. If you watch momentum drop, this is going down. Where could it go? It is going to go down to 25.2, 24.45. Okay, watch these levels. The bears are still in the game. The bears still have a chance. Now, I've been saying ever since we broke out over here, the bulls are in control. And yes, we've been in an uptrend ever since. Okay, we're not on a bull market, we're not on a macro uptrend, we're in a weekly uptrend, we're in a strong daily uptrend, we've been in an uptrend ever since. But until we break above this point, until we get that 32K trigger, until we get the bull market, price up on the monthly chart, until we get that Gaussian channel retest or continuation upwards, the bulls aren't really out of the game yet. They do have a slight chance of bringing it back. They've tried to bring it back a few times, but if they lose this trend line, that whole trend that we've been developing over the last 10 months will be lost, and the bulls will definitely push the price downwards. And again, momentum is going to be the trigger. So let's take a short term, guys. We saw a pretty strong reaction on the short term. Of course, we broke out of this descending channel formation. We had a measured move from these targets. We take the measured move and actually apply it to the breakout point. We can see the measured move target was reached. The measured move target over here was reached. If we take a look at our original structure, we had a second channel in over here from these high points on this point. We actually had that one. I think we had it extending across. I actually can't remember too perfectly. I think we may have had it extending across a little bit lower, maybe over here. I have to go back to watch my video. It's been a while. Over here, we can see the measured move target will actually push us a little bit higher. I think the measured move target was up over here. So depending what channel you're looking at, the measured move will be slightly higher. But we're going to go off this channel today as the price action has reached a major level of liquidity. And ignoring everything prior to this, we have to look at our key horizontal levels of liquidity. If we take a look at short-term price action, we have come back and retested once more. Okay, once more, this $29.8 to $30,000 level. We have retested it once more. As you can see, from 28.8 upwards to 30,300 to 30,400, the VRPV, what is it doing? It is increasing vertically. This means we have significant resistance in the range between 29.8 to 30,400. A very challenging range to push through. It's going to require a lot of volume and a lot of strength. What is happening to the downside? We have a gap here in the VRPV, very easily filled toward the downside. So what I'm expecting right now is a rejection from this level toward the downside. I think we may see a rejection toward the downside. Again, for the bulls to really take control of this chart, they need to get the price above that POC level. They absolutely need to get the price above 30,400. If the bulls can push the price up to 30,400, I have no doubt we're going to see a continuation up into this higher range at 31.2k. Again, the VRPV starts to decrease there and significantly drops off past 30,800. Again, we need to see the price push up over here for the bulls to take control. At the moment, resistance is resistance until it is not. Keep that in your head. Resistance is resistance until it is not. We have buyers, we have sellers, and right now the sellers are definitely selling in this range. We need that buying volume to increase. Let's take a look at our 12-hour chart and run through a few technical indicators. So what did we see? We'll move all this down and bring up the RSI. We saw a nice break of the RSI. Been tracking the RSI, you would have known that we said over the last couple of days, if we want to see a continuation upwards, we have to see the RSI flip positive. We have to see the RSI break through this point. We saw that breakout upwards, and look what happened. We saw a significant candle just after. We delete everything on the chart and bring up that RSI trend line again. You'll see in real time just how effective the RSI can be. We saw the breakout happen over here, one candle prior to a significant 3% rally. I've been telling you guys, the momentum is a leading indicator of price action if you utilize it in shifts rather than actual value. If you're using the momentum as oversold or overbought, you are going to be late. You're going to be absolutely late every time. You have to identify when the momentum shifts, because a shift in momentum represents a shift in the strength between buyers and sellers, and that is what drives the price up or down. You have to take a look at how the momentum is shifting to predict where the price is going to go. If you saw this and you saw the breakout, you would have been able to catch that strong impulse upwards. And again, a 3% move is not too shabby for Bitcoin whatsoever. Now, here is the thing. We are still seeing relative weakness, right? We are still seeing the CVD underneath that key horizontal resistance level. We need to break upwards. We need the CVD to break up here to show strength and continue upwards. This still reflects weakness. It is telling us the buyers still don't have enough strength. We do not have a lot of strength behind this move. We need the CVD to continue upwards, break through this level of resistance for the buyers to reclaim control and push the prices even higher. Until then, again, resistance is resistance to us not. Where could Bitcoin go if we do reject from here? We could very well see a move back into our lower range. Our lower range being, let's go ahead and bring up parallel channel. Our lower range being this area right over here. This is our lower range. We had a consolidation range on a small time frame. We could very well see a move back to retest, potentially back into the POC if momentum, if volume dries up. Until then, resistance is resistance. If we get back above 30,000, we shall continue upwards. So what you should be looking at right now, looking at scaling out of long positions. Taking profits, guys. Resistance is for taking profits. If it continues through the resistance, you can take on new positions. You can enter new positions. Remember, your goal as a trader is not to be right. We're not here telling you this to be right. We're here giving you opportunities and providing information so you can make up your decisions. Your goal is to make the best decisions you can with the information you have at the time to put yourself in a favorable position no matter which way the market moves. That is what your goal is. It is not about being correct. It's about making profit along the way. Okay, so now that we know that, let's go back to that higher time frame chart. If we once again take a look at this chart, when will the best time to be entering again? When will be the best time to take longs again? When we start clearing through this level here. So right now I am in longs. I have longs. I've had longs. We've acquired longs down in this range. Perfect. Okay, a lot of altcoins long in this range. Looking to take profits on all positions in long right now. Opening some shorts right now for a hedge toward the downside. So you've taken profits on your longs up over here. You've still got your longs active. Okay, you've still got them open in case it goes higher and you can add. But you're also taking short hedges right now to offset any losses on those longs, but also take profits if the price moves down, okay? If that happens, guess what? Your longs break even, but you've already taken profit, so you've scaled profit out. If the hedge fails and the price continues upwards, the current longs continue to print and you take a small loss on the short. If the price comes down, you profit on the short. You are profiting no matter what happens. You need to position yourself before these moves occur so you have the opportunity to actually take those hedges. If you're positioning yourself here and it goes up, you have room to work with. You can do so. If you're entering now, if you're taking new positions over here, which aren't shorts, and you're just entering longs now, you are putting yourself at a large downside drawdown risk, and you're really limiting the maneuverability you have as a trader, and you're really hedging yourself on one particular direction only. If that direction does not play out, you get wrecked no matter what. So you have to be able to play both sides sometimes, particularly when we're moving into these swing positions, when we're moving into these key levels of resistance. Thanks for watching, guys. If you want to learn how to trade, obviously check out the Crypto Academy course. I hope you have a great day, and we'll catch you guys in tomorrow's video. We've got a lot to talk about tomorrow. It's going to be a great video. I'll see you guys in that one. Cheers.